Most dividend-paying companies pay out their dividends on a quarterly basis. However, companies could have different quarterly schedules, which means you could invest in 3 different companies and earn dividends every single month. How does this work? Stock 1 could pay their dividend in January, stock 2 in February, and stock 3 in March. And then the cycle starts over through the remainder of the year. 3 stocks that'll have you earning dividends every single month. That's exactly what we're looking at in today's video, showing you how you could be earning at least $500 per month eventually by investing in these 3 companies. But before we jump in, do me a huge favor. Click that like button down below. Subscribe to the channel, and let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me introduce today's video sponsor, which is Dividend Wealth. And if you're like me and you love investing in dividend-paying companies and analyzing those, this is going to be a software tool for you. When you log into the software, you're taken to this screen where you can see some quick lists based on what type of dividend stocks you may be searching for. If you're looking for high yield stocks, you can click on that screener. For dividend aristocrats, they have a screener for that as well. But 2 of my favorite screeners to use are cash cows and dividend growth, as I'm constantly looking for companies that not only pay a dividend, but they grow their dividend. And you need solid amounts of free cash flow in order to do that. Outside of that, once you select a stock or type the ticker in the search bar, it will take you to the company page where you can get all sorts of information, from dividend stats to payout ratios, growth rates, and so much more. In addition, they have a page fully dedicated to both dividend news as well as dividend calendars. So give Dividend Wealth a try today, and by using the link down in the description below, you can get yourself a free 14-day trial as well as 50% off subscription. So make sure you check them out today. All right, now let's get back to our video showing you how you could be earning $500 a month in dividend income by utilizing just a 3-stock portfolio. And again, this video isn't going to focus as much on valuation as it is on showing you how to earn that dividend, but we will be sure to touch on that. And let's begin with stock number 1, which is JP Morgan, stock ticker JPM. As many of you know, JP Morgan is the largest US bank and one of the largest in the world when it comes to total assets. The company has a market cap of $588 billion, and over the past 5 years, shares of JPM are up 80%. Over the past 12 months, shares are up roughly 41%. This is the bank that in its last financial report surpassed $4 trillion in total assets. As I mentioned, one of the largest banks in the world. In terms of the dividend, as you can see here from this chart within Dividend Wealth, the payout has grown over the years and continues to grow year in and year out. The company currently pays a dividend of $4.60 per share. They have a dividend yield of 2.25%, and they have grown their dividend for 9 consecutive years. Looking at this chart, you can see that JPM pays a dividend in the months of January, April, July, and October. So again, a quarterly paying company, and these are the months they pay it out. So how much do we need in order to earn $500 per payout? That's going to total to $2,000 per year in dividend income. Given that they pay out $4.60 per share, we would need to own 435 shares of JPM stock today. At a stock price of $204 right now, we would need to invest $88,740. And I could already hear some of you saying, hey Mark, where do I just come up with $88,000? And the key to remember, you've heard me talk about it on various videos in the past. Dividend investing is not about the year 1 dividend income. It's something we build upon. So maybe you can't have $88,000. I don't have $88,000 to invest right now, but let's build upon it. And I'm going to show you how to do that right now. Let's go over to my Investing Accelerator Compounding Calculator. And for those of you that have taken my course and worked with me, this probably looks very familiar. Let's say we start by investing $10,000 today. And I filled out the stats for JPM specific based on yield and dividend growth. And by adding $1,000 per month, we will reach $2,000 in annual dividend income in roughly 6.5 years. Again, it's a process, which would equate to $500 in dividend income every single quarter for JPM. And the best part about it is the fact that the dividend payout keeps growing. So is now the time to buy shares of JPM? Let's take a quick look at valuation. Analysts are expecting the company over the next 12 months to generate EPS of $16.75 per share, which equates to a forward PE multiple of 12.2 times. This comes in higher than the company's 5-year average of 11.5 times. At the Stock Investor's Edge, which is my personal newsletter, we rate shares of JPM a hold. And if you're interested in seeing other ratings and our deep dives, you can check out the link down in the description below where you can get yourself a free 7-day trial. Now let's move on to stock number 2, which is Procter & Gamble, stock ticker PG. Procter & Gamble is a staple, and they are a dividend king. There's not too many companies out there that rival the consistent dividend growth that Procter & Gamble has. The products that they sell are necessities. So regardless of what the economy's doing, whether it's booming or whether we are in a recession, things that Procter & Gamble sells are necessities. The company currently has a market cap of $390 billion. Over the past 5 years, shares of PG are up nearly 50%. And over the past 12 months, they're up closer to 10%. Procter & Gamble is not a company that's going to knock your socks off when it comes to growth. But if you're looking for a stock to put into your portfolio for stability and consistency, they can definitely check those boxes. In terms of the dividend, as you can see from the chart from Dividend Wealth, another dividend that grows steadily year in and year out. The company currently pays an annual dividend of $4.03 per share, which equates to a dividend yield slightly higher than that of JPM, now at 2.44%. And as I mentioned, they are a dividend king with 67 consecutive years of dividend growth. Looking at this chart, you can see that Procter & Gamble pays a dividend during the months of February, May, August, and November. So how much do we need to own of PG stock to earn $500 each quarterly payout? Given that they pay $4.03 per share, we would need to own 496 shares. At a stock price of $165 per share right now, we would need to invest $81,885. Now, back to the Investing Accelerator Compounding Calculator. Let's again start by investing $10,000 and fill out the stats for PG, a 2.44% yield and 6% dividend growth. By adding $1,000 per month, we will reach $2,000 per year in annual dividend income in roughly 6 years, which would equate to $500 in dividend income every quarter. And that payout continues to grow each year. So is now the time to buy PG. Let's take a look. 2025 EPS estimates are $6.96 per share, which equates to a forward PE multiple of 23.7 times, which is below their 5-year average of 24.4 times. And when it comes to our rating at the Stock Investor's Edge, we rate shares of PG a slight buy. You're getting a slight discount right here. However, if we do in fact fall into a recession here in the US, if rates stay too high, too long, and we see unemployment continue to rise, PG is still going to do well. And you're going to see a lot of investors head for safety. And one of those safety stocks is going to be Procter & Gamble. And that leads us to stock number 3, which is T. Rowe Price. T. Rowe Price operates just like JP Morgan out of the financial sector, but not as much a bank as T. Rowe Price is more of an asset manager. The company currently has a market cap of $26 billion. Over the past 5 years, though, the stock hasn't really done much. It is up only 6%, and over the past 12 months, up only 3%. So as you could see on the chart there, during the pandemic, the stock reached a high of nearly $225 back in 2021. But as you could see also, they have fallen back to about $115, which is where they sit at today. In terms of the dividend, looking at the chart from Dividend Wealth, T. Rowe continues to grow their dividend, but at a faster clip than the others. And they even mix in a few large special dividends. The company currently pays an annual dividend of $4.96 per share, which equates to a dividend yield of 4.32%. Dividend growth of 37 years, making them a dividend aristocrat. So when it comes to shares of T. Rowe Price, you get a unique blend of a high dividend yield and fast dividend growth, which helps that compounding process move even faster. Looking at this chart, you can see that T. Rowe pays a dividend in the months of March, June, September, and December, a more traditional schedule there. So how much do we need to own of T. Rowe stock to earn $500 each quarterly payout? Given that they pay out $4.96 per share, we would need to own 403 shares. At a stock price of about $115 right now, we would need to invest $46,370, by far the lowest of the 3 stocks given their much higher yield. Back to the Investing Accelerator compounding calculator, let's again start by investing $10,000 and fill out the stats for T. Rowe, a 4.32% yield and an 11% 5-year dividend growth rate. By adding $1,000 per month, look at how quickly we reach our $2,000 annual goal, taking less than 4 years to get there. And by year 10, you would reach nearly $11,000 in annual dividend income and growing much faster than the other two stocks we've looked at. So is now a good time to buy shares of T. Rowe? Well, analysts have 2025 EPS estimates at $8.71 per share, which equates to a forward PE of 13.2 times. Their 5-year average is 14.5 times. But when you browse out even further, their 10-year average was closer to 15.5 times. So right now, I like the valuation you're getting here with T. Rowe. And the catalyst higher for them is going to be further inflows. As more investors come back to the market, more 401k plans, that's going to be just even further fees that they'll be able to generate as a company. So there we just looked at 3 different companies that pay their dividends out on totally different schedules. Stock 1 paid in January, stock 2 paid in February, and stock 3 paid in March. And then we started the cycle all over again in Q2 and throughout the rest of the year, having you earn $500 per month in dividend income, not annual dividend income, monthly dividend income. So the key thing to remember is the fact that you're not going to get there on day one. Dividend investing is not about the year 1 dividend income. It's about the compounding process. Allow the process to play out and you will eventually get there. Everyone has to start somewhere. I had to start somewhere. Warren Buffett had to start somewhere, in fact. So don't get discouraged by that. Don't focus on year 1, focus on the long-term plans by looking at that calculator. And if you're ever interested in working one-on-one with me, check out the link down in the description below for my 6-week Investing Accelerator course, which we open enrollment from time to time based on open spots there. And we will go through, put together a strategy, an action plan, and show you how exactly I value stocks. Thanks again for watching. Down in the comments section below, let me know, what is your annual dividend income right now? And what is your goal over the next 5 or 10 years? And if you haven't done so, make sure you smash that like button down below, subscribe to the channel, and we'll see you in the next one. Take care.